it does not constitute to any buy call or selling call. All right. And also, I'd like to, at the start of this presentation, maybe just manage the expectation a bit. For this session, right, it will take about an hour or so. So what I'll be sharing is some strategies, some simple techniques that you can use in trading the US indices and through the charts. But of course, we do not expect this to be a full presentation, a full strategy, because we won't have time to go through the whole thing. So just probably enough to get started. But if you need to find out more, maybe we can discuss after the session. All right, thank you everyone. So, okay, this is what we'll be going through today. So the first part, we'll be talking about a brief introduction to technical analysis. We have been always talking about technical analysis, TA for short, but what exactly is technical analysis? Okay, so two of the indicators that we'll be using today will be the moving average and relative strength index. We're also going through briefly on these two. And then you'll come to our main part, which is part 2, the trading strategy. What I would like to do is we'll give some example on how to use some of this indicator to determine the trend for the day. So it's an intraday trading strategy. And also how to enter the trade using a 3-step strategy. Okay, so this is what we'll be going through today. Okay, before I start the session, just a quick warm-up to have a short discussion. Okay, for those of us who have been trading or we have been hearing about what traders are talking, right? There's always a discussion. To be successful in trading, all right, we need, people always say that, okay, IQ and EQ, all right. So IQ, of course, we understand, all right? We need to have reasonable IQ to be able to understand concept, to be able to understand the market movement, to be able to analyze and make decision. So this is where the IQ part comes in. But EQ, sometimes when we talk about EQ, it's very vague. What exactly are we talking about here? EQ. Why do we need EQ in trading? Okay, some people will say that, oh, EQ means discipline, right? EQ means you need to have self-control. Okay, yeah, probably true, but it's still very vague. So maybe later on, if you stay throughout the end of the session, I'll be discussing this in a bit more detail. And other than IQ and EQ, right, there's actually one more factor that I feel is very important for trading that maybe not many people have discussed about. So if you want to know and you want to find out more about this, stay tuned to the end. Then I'll have a short discussion on these two. All right, so this is just a warm up to get us started and to get your attention a bit. Okay, so let's go into the seminar proper. So the first part we're talking about is the introduction. So to begin with, what exactly is technical analysis? Why is this question important? Yeah, because if we understand what is technical analysis, then we understand what we are trying to do here. So the definition here, technical analysis, sorry, there's a spelling error. It's technical analysis, not technical analyst. It's a pattern recognition technique, all right? So the keyword here is pattern recognition. And what we are trying to do in a technical analysis is to find repeated patterns, okay, in price action. So what do I mean by that? Just to give you a simple example, we have heard of people saying double top, double bottom. Probably you have heard of these patterns before. So why when people say that, oh, double top is a sign that it may be bearish already because market may be turning, or double bottom, that means the market may be turning, reversing upwards, okay? So why do people say that? It's probably because a lot of time they look through the history, the charts, right? And they find that this pattern has been repeating itself many times, right? Has been repeating itself many times, and That's why they come up with this term double top, double bottom. Of course, there are many other patterns around. So in technical analysis, what we are trying to do here is to find a repeated pattern, okay? Repeated pattern in price action. So why do people use indicators? Indicators is a way to see the relationship between price and this indicator and how it has repeated itself. Okay, so this is what we're trying to do today. We're trying to come up with a strategy that captures repeated patterns. All right. So next thing, we talk about trading strategy. Of course, there are many different styles of trading. This one, first one is called the scalping. Scalping is a very intensive trading strategy. Okay, you need to be really, really focused and be on the screen all the time. Because when we do scalping, right, you are doing very short-term trading. That means you can go in and out of the market probably within minutes or even lesser than that, depending on how fast the market moves. So probably within a day, you can do a few hundred trades if you are intensive scalper, right? So this is one of the trading strategy, scalping. This is the fastest method, fastest trading style. Another one is more of a position trading, okay? So in position trading, we don't go in out of a trade so fast, so frequently. But what we do is we still want to keep it short. So what we do is within the day, we will try to buy and sell and close off the position before the end of the day. So this is an intraday position trade. So this strategy will be useful or not useful, will be more suitable for traders who don't have the time or don't have the luxury of watching the screen all the time. So you can just spend probably a few hours on off the screen to check the price action, and then when there's a trading opportunity, you can just go in. Okay, so you don't have to be on the screen all the time. Excuse me. So the last one is what we call the interday swing trading. This is really more of a overnight position holding. So probably if let's say you don't like very fast actions, you don't like to buy and sell too fast, but you still want to do trades, maybe you can hold position for a week or so, then maybe this strategy is suitable for you. Okay, so there are different type of strategy in the market, and it's important to define and understand which strategy we are looking at so that we can decide whether is this strategy suitable for me, okay, for my personality, for my character. Right, so for today, right, the strategy that we'll be using is the second one, okay, the intraday position trade. Right, the strategy that I'll be sharing today will be more suitable for intraday position trading. Okay. All right, let's move on to the indicators that I'll be using today. The first one is the moving average. So if you have been trading before or you have been charting before, right? Moving average is one of the most common or the earliest tool that we probably come across. But it's still useful. It doesn't mean that everybody's using it is no good. Okay, it's very, very useful tool. Um, I'll show you how we can use it. There are many, many different ways to use moving average. All right. So, but the one that we'll be using today, right, is called the exponential moving average, or EMA for short. All right, the exponential moving average plays the formula, right, plays a more greater weightage on the recent prices. So it can actually react faster to market movement. So if market changes, the exponential moving average will react faster than the normal simple moving average. All right. So this is one of the indicators that we're using today. And this is how it looks like on screen, right? You'll see two lines. So these are the moving averages. We'll go into more details on how to use them later on. Okay, so this is the first indicator that we're using. The second one is the relative strength index, or the RSI for short. So you can see the RSI is on the bottom of the screen. It has, according to the creator of this relative strength index, right? it has two levels. Okay, two levels. So what it does is it tries to measure the speed of the price movement, how fast price change. Okay, so what does this do? This gives us two levels in the RSI. If the prices are moving up too fast, okay, then if it goes above 70, this gives us an overbought signal, a temporary overbought signal. Okay, and if prices goes to near 30 or below 30, this is a sign of oversold, temporary oversold. Okay, that means prices are coming down too fast. Okay, potentially oversold. So this is how we use the RSI. Okay, above 70, overbought, prices are going up too fast. Below 30, oversold, prices are coming down too fast. All right. So we'll see how we use these two indicators to come up with a strategy, okay, or plan, a trading plan that we can use to trade the CFD index. Okay, so right now we are coming into the strategy. So the first part is we need to be able to identify the trend. Okay, in every trading strategy, it's very important to be able to identify the trend. So let's see how we can do it. First of all, this is the setting for the moving averages. Total, we will be using 5 EMA, okay, 5 moving averages. And these are the settings. The following settings, right? 5, 20, 50, 100, 200, applied to close. And the time frame, it can be 15 or 30 minutes depending on volatility. If the market is very volatile, we will use a higher time frame. If the market is quieter, we will use a 15 minutes time frame. Okay, so we will see some examples later. But these are the settings, so if you like to record down. Okay, so next. Okay, this is a chart of an S&P. Okay, this is a chart of S&P. So how do we decide, how do we determine whether it's an uptrend or a downtrend? So if you see that these are the 5 moving averages on screen. The first one, the pink color one, is the EMA 5. Okay, 5 means the average of 5 candles, right? And the purple one, the second one, is EMA 20. So it's an average of 20 candles. Third one is 50. The blue color one, the dark blue, is 100, and the orange will be 200. So when we see the alignment of 5, 20, 50, 100, 200, top to bottom, sequence this way, from the smallest to the biggest, then it's an indication that the uptrend is more likely to be an uptrend, and this is the beginning of the uptrend. Okay, so you can see, if you can see my mouse, I don't know whether you can see my mouse. The 5, 20, 50, 100, 200. So this will be where the uptrends begin. So of course, in between, the moving average may cross over each other, but it's okay. The most important thing is we determine the starting point first. So once we see the sequence of 5, 20, 50, 100, 200, that's the starting point. And then from there onwards, it's considered to be uptrend until price, the candle, breaks below the last moving average, which is a 200 moving average in this case. Okay, in an uptrend, if it breaks below the 200 moving average, that's the first indication that the uptrend is may have stopped. Okay, but to identify whether is it uptrend, we see the sequence 5, 20, 50, 100, 200. Okay, so this is the uptrend. So what's the downtrend? Downtrend is just a mirror image of an uptrend. Okay, so you can see 5 is below, followed by 20, 50, 100, 200. Okay, so the 200 now is on top, and the 5, the lowest one, is below. So once we identify this sequence, the starting of this sequence, this is where the potential downtrend starts. Okay, potential downtrend starts. And it will be a downtrend until the candle breaks above the 200 moving average, which is the orange line, the last one. Okay, So once we identify the starting point, it will continue to be a downtrend regardless. In between, the moving averages may cross over each other, but it will still be considered a downtrend until price breaks above the 200 moving average. Okay. So after showing you these two charts, you may feel that even without the lines, right, it's quite obvious that this is a downtrend. Okay, because you can see the prices coming down quite fast. So it's obviously a downtrend. But of course, not always in this market is always it's not always in this case that's so obvious. So for example, if we see a chart like that, okay, if you see a chart like that, how do we determine what is the trend? Okay, it looks like very range trading. But if let's say I add in the lines, okay, at a glance, you probably have a few. Okay, this is probably more bearish. Okay, why? First thing, you can see that there's a sequence beginning, okay, 5, 20, 50, 100, 200 from bottom up, okay. So this is indication that it's more bearish. And second thing, prices are generally below the 200 moving average. Okay, so these 2 points can help us determine that this is more likely to be bearish. All right, so this is the Nasdaq 100 chart. Another example, this is also a Nasdaq 100. So from here, if we don't use the line, sometimes it's very difficult to determine the trend. Okay, is it an uptrend or downtrend? It looks like a range trading, range bound. But if once we add in the 5 moving averages, right, the trend becomes very clear. Okay, this is obviously more bullish, right? It's 5. You can see that the 5 is on top, followed by 20, 50, 100, 200. Okay, top down. So this is indication that it's more bullish today. And prices are generally above the 200 EMA. So this is also another sign that this is more bullish. So you can see I use the term more bullish and more bearish. I'm not saying it's definitely uptrend or downtrend. Why? Because all these are just a guide indication. In trading, right, it's more of a reaction to how the price move uh, with the indicators. Okay, so if let's say right now, although now it's more bullish, but if price starts to drop below the EMA 200, okay, I have to react. If I have a position, I have a long, I have to react. Okay, because market is changing. The movement, the indicators, the prices is telling me that, oh, I think the trend is changing. Okay, so we have to react. So this is not 100% that you follow this or every time you get right. More importantly is how we manage the trade. Okay, that's more important. So but we need to still have a guideline. So these 5 moving averages, right, will be useful for us to determine which side is it more likely to trade. Okay, is it up or down? And last example, you can see this also looks very range trading, but once we add in the line, okay, this is a bit very more complicated. You can see that the lines are not organized. Okay, they are not in sequence. You don't see a 5, 20, 50, 100, 200 very obviously. Everything seems to mix around. And prices are trading up and down, up and above and below the 200 moving averages, 200 moving average. All right. So what does this tell us? This tell us that likely this this period of time, the market is going to be range trading. Okay, market is going to be sideways. It's very important to also determine this because why? This strategy that I'm sharing with you today, right, is more of a trend following strategy. So if we see a market that is range trading like this, then we can't apply the strategy. We can't apply the strategy. So if it's range trading, we definitely need to use another trading strategy. All right. So we need to know what we are doing. And if you see it's a range trading like this, then we can't apply the entry levels. Okay. So please take note. So it's very important, like I mentioned, the first step in every strategy is to determine the trend. You must know whether is it more likely to be up, down, or is it sideways. Okay, like this case. Okay. So now we have we managed to go through how we can determine the trend. Let us quickly go to the steps to enter, how to enter a trade. Okay, I hope I'm not going too fast. If I am, Lucas, please let me know. Okay, if anyone's is feedback. Okay, so how to enter a trade? All right, so first example. Okay, if we look at the beginning of the chart of this example, it's started off as a range trading, range market. Okay, started off as a range market for a while, for a period of time, and then suddenly it exploded upwards, and you can see that the moving average starts to form 5, 20, 50, 100, 200 in the sequence, a very nice sequence. Okay, so when we see that after a sideways trading and then we see the sequence forming, it's telling us that this market is beginning to move upwards. Okay, uptrend. So where do we enter? Where do we buy or sell? Based on our experience, okay, like I mentioned, this is technical analysis is based on pattern recognition. So we have seen this pattern repeating itself many times. Okay, in this chart. Okay, in this chart. So if we see the prices normally stops at the EMA 200, which is the orange line. Okay, and the EMA 100. Okay, the third circle. The first two is the support is at the EMA 200, and then the last two circles is at EMA 100. Okay, so if it's on an uptrend, right, the EMA 100 and 200 usually forms the support. Okay, forms the support for the price. So these two levels will be potentially where we can enter. We can look to enter. So for example, let's say in the morning you open a chart and you take a look and say that, oh, okay, identified, it's an uptrend. Okay, it looks more on the uptrend. So I'm thinking to buy. So straight away we can look for the EMA 200 or 100, and we can place some orders over there. Okay, so you can based on the levels and we place some orders. And you just put, of course, with your risk management, and then you can don't look at it. Okay, until probably depends on when the next time you have time to look at it, right? So you don't have to be on screen every moment to check prices to do the trading. Okay, because this strategy won't be suitable for that also, because for this for the price to hit the EMA 100 and 200, right, you can see that every day probably only once or twice it does that. So if you're on screen just to wait for it, it's going to take very long. Okay, so this strategy is more suitable for people who likes to trade on the go, who don't have time to keep looking at the screen, but have some time to just check within the day. Okay, so you can see this is the first example. This is the second example. Okay, this is a downtrend. So same thing, you can see that at the beginning of the chart, it started off like quite the range trading, and then it starts to drop, and we see the moving averages forming in the sequence from bottom up 5, 20, 50, 100, 200. Okay, and then price starts to reverse back to the 100 line, okay, the first circle, and stops there, starts to drop again. And then the second wave tries to reverse back again, but stops at the 200 and then drops back again. Okay, so this is so this shows that the 100 and 200 is generally the more significant levels. Okay, for traders, for us to enter. Now the next question. So do I park my order at the 100 or the 200, or how do I determine? Because if you can see, sometimes the 100 and 200, right, between the 100 and 200, the gap can be quite big. Example for this, this is the Nasdaq 100. At the 100 line, right, is at about 9,170, but the 200 line is about 9,250. Okay, so that's about 80 points gap. 80 points gap, which is quite a lot. So if we want to be more precise in our entry, what can we do? What can we use? So remember in the beginning, we have two indicators. First one is the moving average. The other one is the RSI. This is where the RSI come into play. Okay, so I give you an example, the same example, the uptrend example with RSI. Okay, so you can see when it hits the 200, RSI is near 30. Okay, same thing for the second one. The RSI is also near, this one goes below 30. And the third one, the third circle, if you see the third circle, it hits the 100 line. When it hits the 100 line, the RSI is also near to 30. Okay, so this will help us to determine whether is this a good price to enter? Is this oversold, temporarily oversold in the uptrend? All right. So in the uptrend, if it's temporarily oversold, this is where we want to buy. Okay, I repeat again. In an uptrend, if prices are temporarily oversold, this is where we jump in to buy. Okay. So with the RSI, it will help to tell us whether is price oversold or not. So if in this case, if let's say the price dropped to EMA 200, but the RSI has not shown any oversold signal. It's not oversold yet, it's not below 30 or near to 30 yet. This may be an indication that the EMA 200 support, right, may break, may not be that strong. Okay, so for a higher probability trade, we'll want to see prices moving down to the EMA 200, the orange line, plus the RSI going below 30 or at 30 at least. That will give us a higher probability trade. Okay, so that will give us a higher probability trade. So 3 steps. First step, identify the trend. So once we identify the trend, we look for entry, which is the EMA 100 or 200. So after prices hit 100 or 200, we need to check the RSI just for a higher probability to see whether is it oversold. If it's oversold, yes, okay, I'll take the trade. Okay. So next example, last example. So this is the downtrend, okay, with the RSI. So you can see that there are a few two or three opportunities here. All right, the first one you see it touched the EMA 200. It touches the EMA 200, and then the RSI is near to 70. Okay, it's near to 70. And then the last one, of course, you can see hits the EMA 200, and it's also near to 70. But of course, I would prefer it to be over 70. Then I'm more comfortable. It'll be a better trade to take. Okay, so these are all the Nasdaq 100 charts. We know that the tech industry in the US is booming right now. Okay, you can see all the share prices are all moving very fast. Okay, so it may be a good opportunity to take a look. Okay, so this is for downtrend. All right, just a quick summary of how we do the trades. First of all, we need to define the trend. Okay, it's either 50 minutes or 30 minutes. Okay, 50-minute or 30-minute trend. So once we define the trend, whether it's up or down, we wait for prices to move towards the two support lines, which is 100 or 200. Okay, which are the 100 or 200 lines. Number 3, we use the RSI to determine whether is it oversold or overbought. So in a downtrend, we want prices to be overbought. That's where we start to short. Okay, in an uptrend, we want prices to be temporarily oversold. That's where we come in to buy. Okay, so of course number 4 is when we buy or sell when it happens. Okay, so this is the strategy that I'll be sharing today. Okay, like I mentioned, I won't be able to go into very detail of how things how do we develop all this. But if you can capture some of this, maybe you can try to use it to play around with it and see whether you can see some patterns repeating from it. Okay, so right now, let me just go to the live chart. Okay, so this is our MT5 platform, okay, MetaTrader 5 platform. You can see this is the S&P 500, okay, S&P 500 chart. So just now I mentioned sometimes we use 15 minutes, sometimes we use 30 minutes. So how do we determine it? Let me switch to a 15 minutes, okay, and then you can see that there are signs that the support in the 15 minutes, the 200, right, EMA 200 is not so accurate, as in there is a lot of false breaks. If the uptrend is real, is continue, is correct, but there's a lot of false breaks. You can see that it breaks and then go back up. So in this case, this is telling me that probably the market is too volatile. So what I would do is I would switch to a 30-minute chart, and then you can see that it's better. Okay, the false break here it becomes the support, more accurately becomes the support. Okay, so based on previous prices, we can use to determine how volatile the market is, then we switch the time frame accordingly. Okay, so right now here, this is the current market price. So if I were to put on a trade, I'll be looking to buy because the trend is still on the uptrend. Okay, still on uptrend. I'm looking to buy, and here, this will be my support level. Okay, here and here. Right, so what is this level here? It's 3250. Okay, so first support will be about 3265 or 3250. Right, so if prices reach these two levels here today, then I'll take a look, and then I will read the RSI, which is here below. Okay, I'll take a look at the RSI as well to see whether is there any oversold signal. Okay, so if there's any oversold signal, then I'll look to buy. Okay, so this is for the S&P. So this is the Nasdaq. Okay, Nasdaq, you can see that it's very quite wild. Okay, it's pretty volatile. But right now, at this moment here, we can see that this line is supported. Okay, the 200 moving average is supported. Currently at this price here, which is around 10,000 and about 820. Okay, around that level, the support levels. But I'll be more careful trading Nasdaq today. Why? Because the RSI, if you can see, right now the price is already pretty near to the EMA 200, but the RSI is still not near to the oversold signal. Okay, it's probably around 50. So my guess is, based on my experience, if the price comes down to this EMA 200, right, RSI may not be oversold. So potentially this Nasdaq can be range trading. It may become range trading. Okay. Usually it doesn't go downtrend immediately. It will probably go range trading a while before it the pattern changes and then it becomes a downtrend. Okay. So this is my guess for the Nasdaq tonight. We're likely to see range trading, but of course, hard to say because right now it's more of an earning season, so it may react to some company earning releases. Okay, so that's why I'm saying trading is more of a reaction. We need to be able to react to different price actions movement. Okay, so this is the Nasdaq. So last one will be the Dow Jones. This is the US 30 Dow Jones. Okay, so you can see Dow Jones is very volatile because it's only 30 shares, right? So you can expect the price action to be a bit more volatile. So this is the 30 minutes and it's still a lot of false break. Okay, but generally for the Dow Jones, it's an uptrend. Okay, it's an uptrend. So I will probably do the same. We'll look for prices to hit the support. 26800, probably around 26800, 830 like that. Okay, and then to look to buy. Of course, we have to use the RSI to for confirmation. Okay, if it hits at the 200, 100 or 200, and then the RSI is oversold, that may be a good trade to take. Okay, so this is the live prices, live chart analysis for today. So this is how I will use the strategy that I shared just now to trade the market tonight. Okay, so back to my slides. Okay, okay, basically that is the end of my sharing session on the technical analysis, right? So if let's say you have some questions or you want to know more, we can arrange a one-to-one session, or we can arrange a time to take your questions, right? Take your questions and go through with you. And okay, let me just go through this. So just now I mentioned that our trading platform is the MetaTrader 5, MT5, right? It's zero commission. So whatever you trade on the MT5, right, there's no commission. Okay, so it's very simple. Whatever profit and loss you see on screen will be net, so there's no commission. It's a award-winning platform. If you have used MT4 before, right, it's a very famous platform, and this MT5 is the latest version, right? And importantly, it's a multi-asset. More important is this MT5 is able to provide multi-asset, so you can actually trade FX. Okay, just now we go through CFD indices. You can trade gold or silver, and yes, the latest we have is shares. Okay, we have individual company shares on our MT5 as well. So once you're on board MT5, there are a range of assets that you can trade on at all zero com, even for shares. Okay, and of course, MT5 we can do micro lots. So let's say you're a beginner and you're not so sure, but you want to try out with low risk, the MT5 will be useful because we micro lots is available, so you can start very small with very low risk. Okay, and there are also free market analysis tool on the MT5. So there's free auto chartist and trading central tool. With all this, we actually paid quite a good amount every month to this provider, but it's free to client. Okay, free for client to use. So if you're on onboard MT5, you can actually use all these free tools from us, right? So if you're interested to learn more, you can try our demo. Okay, just scan the QR code. It'll bring you to the demo landing page, and you can register for the demo right now. And straight away, you can try out our MT5 platform. Okay, the password will be sent to you immediately. Right. So if you're interested, please just scan this QR code and then try our free demo. All right. Let me just go on first. If you miss the QR code, it's okay. Later at the end, I will just screen it again. All right. So if let's say you're interested to start live, okay, start trading now. This QR code here is to open a live account with us. So you can, if you have SingPass and if you're a Singaporean and if you have SingPass, you can use my info to open an account. Okay, it will just probably take you 5 to 10 minutes of your time to open the account. Okay, so it's pretty fast. So if you hear what I'm sharing today and you're interested to get started, you can open an account. So for our customer, right, we have some services like WhatsApp news updates. We can have one-to-one sessions to guide you through. For example, if let's say you want to find out more about strategy, what kind of strategy is suitable for you, how much should you start with, um, how much risk should you take? Okay, all this we can go through with you. Myself and my team, right? We will be able to help clients, to guide clients on if you are new to it, we'll be able to guide you and let you know, give you some advice on how to get started. Okay, so you will not be trading alone. You're not just facing the platform. We have a group of team of experienced dealer to assist you, to guide you if you are just beginning to trade. Okay. Okay. And other promotions, okay, that's ongoing right now. If you have heard of Singapore Index SIMSKI futures right now, there's a promotion running. Okay, this is the commission. And also, if you're interested in gold futures, micro gold futures, there's also a very cheap commission right now, only 150. Okay, so these are the current promotion that that we are having. If you are already our existing client, you will be entitled to this promotion. So if you have any questions, just feel free to contact us, then we can guide you accordingly. All right. Okay. So thanks for staying all the way to now. Back to our discussion earlier on, the first question that I put up on where we talk about successful trading, we need IQ, EQ, and what else? All right. So let's go back to this discussion. Okay. First of all, just now like what we mentioned, in trading, right? Definitely we need IQ. Why? Because we need to understand concepts and process and analyze information quickly. So this is required to create a trading strategy. We need to understand how the market moves, why the market moves this way, and what are the things that we can do to track the market movement. So we need some IQ for this. But of course, if let's say I don't know about all this, it's okay. We can still attend classes, or we can talk to people to understand what's their trading strategy, and we can copy. Okay, so IQ is important, but why many people say that it's not the most important? Because actually trading strategy we can learn from other people. We don't have to create our own. Okay, but EQ, what is the purpose of having high EQ in trading? People always say EQ. Okay, what does EQ means? In trading, we know there's a lot of emotion involved. Okay, and two of the most common emotions will be greed and fear, right? But I always tell clients, right, if you control greed, right, you can control your fear. Okay, why? Because a lot of times there's fear when we trade very big size, okay, and we don't know how to cut loss. Okay, so that's where the fear comes in. But in EQ, what exactly do we want to do? Okay, how to convert this so-called art into science, something that we can understand and make use of. What we want to do, okay, emotional quotient, right, is the understanding of our emotion and knowing where is our threshold. Okay, so in trading, first thing we need to know is where and when do we start to have fear. Okay, example, does losing $50, unrealized loss of $50 cause fear in you? Okay, or does unrealized loss of $500 cause fear in you? Okay, different people have different threshold, of course, depending on how much money you have in the account. Okay, so different people have different fear threshold. If your threshold is $500, let's say, and then suddenly you open your trading platform and you see that your losses becomes $1,000, double of your normal range, you may start to panic. Okay, you may start to panic, you may start to have fear. Okay, so understanding where is our threshold, we make it into money terms like losing how much, I'll start to fear, I'll start to panic. That will help us to determine where we should place our stop loss. First thing. Second thing, how big our position size should be. Okay, so I repeat, we need to understand how much losses will cause us to have fear. Okay, fear as in let me rephrase. Fear as in we don't want to cut loss already. So for example, if if I see a loss of $1,000, oh, what runs in my mind? I'll start to think that I hope it go back. Okay, go back to maybe $500. I'll cut loss. Okay, once we think like that, right, we can't cut loss on the spot, right? That means this is already past our threshold. It already passed our threshold, so we can't make a logical decision already. Okay, so we need to know at what level, at how much losses do we become emotional? Do we lose our discipline? Okay, so once we understand this, then we can know we will know where to place our stop loss, how much position size should I be trading. Okay, so I hope everybody understand what I'm trying to say here. Okay, so the third factor that I think a trader needs to have, right, is AQ. Right, I don't know whether anyone heard of AQ. So what is AQ? AQ stands for adversity quotient. Okay, adversity. So what is adversity? Adversity means going through a very bad period of time. Okay, going through a very bad period of time. So AQ is the ability to handle adversity. Okay, how fast? Okay, is how fast we can recover from a setback and then get going again. All right, take some time to sink this in. Adversity quotient. How fast can we recover from a setback and then we get going again? Why is this important? Why is this important in trading? Why is this part of this intelligence is so important in trading? Okay, in trading, right, sometimes it's very funny. We get angry when we lose money, right? We get upset when we lose money. But we can also get angry and upset when we make money. Correct or not? Why do I say that? So for example, oh, I make a trade and it went up $100 in my favor. I took profit $100. And then what happened next? The market continued to rocket up and you could potentially make $1,000. Instead, you just make 100. Okay? Will you get upset? I think most of us probably will be quite upset, right? Say, wow, I should have waited and get $1,000 instead of just this small $100. All right. So what happens when this happens? A lot of time when after we take profit, okay, or after we cut loss, let's say, there is this tendency to do a revenge trade. If we didn't have a perfect, if we don't have a perfect trade, there's this tendency to do revenge trade. Right. So for example, I took profit $100, and market continue to go up another $50, another $100. I say, I think it's still going up. Let's go in again. And you go in, the next thing you know, market starts to come down and you lose $200. Okay. And sometimes also if you put a stop loss and then you get triggered, okay, you get triggered, and then market rebounds, and then we get angry. I say, so you don't care. There's no setup. We also want to go in. Okay, it's rebounding. I buy. So you buy again, and then that's where it really plunges, and we lose more. So the ability to recover from all this setback, especially in trading, because in trading, we will always encounter this kind of scenario. Okay, we always encounter this kind of scenario. No matter how good you are a trader, it's very, very difficult to get a perfect trade. That means you buy at the lowest and sell at the highest. Okay, so this adversity quotient is very important to help us regulate ourselves. Okay, to be able to recover from a silly trade or a not so perfect trade, and then we get going again. So how do you do that? In adversity intelligence, right? First thing is acceptance. The faster we can accept the fact that this has happened, the faster we can move on. A lot of times, we keep on going over and over again the same thing. Okay, after it has happened, say, I should have done this, I should have done that. Why didn't I follow, or why this and that? Okay, and then I lost so much money, this and that. Okay, but if we can accept it fast, okay, that's it. I've done something and it's not good. It has passed already. There's nothing else I can do. Accept it and move on. Okay, so this is a mindset This is one of the mindset that traders need to have. Okay, we be able to accept that this has happened and move on. Otherwise, you'll realize that a lot of times you'll be doing a lot of revenge trade, which is very, very unhealthy. And that is where a lot of times people lose the whole account, okay, where the account go bust. Accept, adapt. Okay, why adapt? Because sometimes after some losses, okay, for example, let's say I started an account and I made some money, maybe let's say $5,000. Oh, so I'm thinking, wow, how can I spend this $5,000? Okay, and then suddenly my next trade I lose the $5,000 back. Okay, so you have to adapt. Okay, you have to accept it, and you have to adapt that. Okay, I don't have this 5,000 anymore. All right, and other than this, we also need to adapt into the market. Is my strategy not working already? Okay, so we need to always review and adapt to the market and try to tweak a bit to see whether it helps or not. Okay, and then of course we have to get going again. So adversity quotient is something I find that is very important in trading. All right, so that I like to share with you all, the ability to accept the fact that this has happened and we have to just go on. Right, this is very, very, very important, I find. Okay, so just a quick summary of what we have discussed here. So IQ is really about more of the trading strategy, how we develop, how we understand the market, and how we develop a structured strategy to trade. EQ will be probably to understand where is our fear, how much losses will cause me to be this to not follow my strategy, to not be disciplined. Okay, so we need to know that, we need to understand that. Okay, that one everybody is different, so only you will know how much losses will cause us to panic. All right, so once we know that, then we can, based on that amount, derive a position strategy, how much position size to trade and how much where to put our stop loss. Okay, and lastly, even with that, even with the EQ in place, right, sometimes it's very difficult because if the market is really very volatile or is there's a lot of news releasing, okay, that changes very fast, we can have a losing streak. You could probably follow your strategy very disciplined, okay, you follow your strategy, but still it's possible that there is a losing streak, maybe lose 3 or 5 or 7 or 10 in a row. That is where the adversity quotient have to come in. Maybe we have to accept, hey, something is not right, okay, we accept, I've been losing. Then we have to adapt and then move on. Okay, so just a very simple sharing. I hope that it's useful, whatever I've shared today. Like I mentioned, it's not going to be very, very comprehensive, a full coverage of everything, but hope that whatever you have you hear today will be useful to you in some ways. Okay, so like I mentioned, if you like to have some support in your trading, you can join us, okay, be our customer and ask for our support. Okay, we are here to help you. We are here to share with you whatever we can, okay, to guide you on your trading journey. So you're not just facing an app on a computer. Okay, we are here to help our clients. So take the first step. Either you try our demo or you can straight away open a live account. This will be the QR code for you to scan and go on to the web page. All right. With that, I will end the session. So let me see.
Hi, Simon.
Okay.
Uh,
Yeah.
Thank you for your sharing, insightful sharing, especially on the emotional part. I'm sure a lot of traders can relate to that. Can we do 2 questions?
Okay.
Uh, okay, so we have one question from Mr. Lim. He goes, how come the live S&P Nasdaq volumes that you have shown us on MT5 does not have any volume on it? Can you address that, please?
does not have any volume.
Yeah.
Okay, just give me a minute. Let me go to the okay, what volume does not have any volume?
Yeah, because usually for S&P is futures,
Hmm.
it's an exchange traded. So on the
Hmm.
MT5, they don't see the volume. They can't see the amount of contracts
Okay.
traded. That's the
Okay, so
question.
it's more on the technical aspect of the product lah. Okay.
Yeah.
Yeah. Like what Lucas mentioned, right? This is a CFD. CFD is over the counter, so it doesn't go through the exchange. There's no particularly say any recorded volume. Okay, because every brokerage house, right, they will have their own CFD prices, and then there's no centralized place to record all the trading volume, unlike an exchange. So if you really need volume, right, then you probably need to look at the futures S&P. Yeah, I hope that answers the question.
Okay, thank you. So we have another question from Mr. Lim, different Mr. Lim. Okay,
Mm,
Simon, you mentioned that it's a zero commission on the platform. Does that
yep.
applies for US stock as well? If so, how does it differ from poems?
Okay. Yes, whatever you see in this platform, they're all zero commission. So US shares, yes, they're also zero com. How does it differ from poems? Are you saying poems CFD? If it's a
Yes.
poems CFD, then first thing I would say it's a platform. Okay, because this is the MT5 platform. You will be able to trade through this platform. There's a mobile and there's this desktop version. Um, the order types may be a bit, you will have more advanced order type. Okay, so you'll probably be able to do things like um, if done order. Okay, so if you can queue a price, and if it's done, you can have a stop loss take profit automatically placed for you. Okay, OCO order. This kind of order types that is this are available in MT5, and of course the charting and all the tools available in MT5 will be different compared to poems. And another thing probably is in poems, I think it's not zero commission. So for us, if it's zero com, so the how do I explain that? Basically, I would say like if you want to know the main difference between this CFD and poem CFD, right, will be the platform. I will emphasize on the platform. Okay, and zero commission. These two point will be the main difference between us and poems. Sorry, I don't know whether I answered the question.
All right, I think it does. Okay, thanks a lot, Simon, once again. That is all the time that we have for today. Thank you so much for being a wonderful audience for tonight's webinar. A link to the recording of this webinar will be made available in our follow-up email tomorrow. If you have any other queries on the webinar or you would like to get addressed and know how to get started, simply reply to our email and we'll get in touch with you. This is Lucas signing off. Thank you and have a good evening ahead.